Hi guys, welcome to ALTCOINS. I am Alan Chang. Let's get started. In this episode, we'll cover the weekend update on Bitcoin, what's going on with altcoins, ETH XTZ, ADA, SAN, Dogecoin, and the current status of the Celsius network, settlement of the 3 Arrow Capital, performance of DeFi and NFT, also the latest news in the market movement. If you like my video, please don't forget to hit the like and subscribe button below. I really appreciate it. First of all, let's check out the current status with Celsius Network. According to a law enforcement officer of SEC, Joseph Rotunda, the SEC of Alabama, Washington, New Jersey, and Kentucky has already started investigating the stop withdrawal of Celsius Network. Also categorized this as a priority of investment. The committee director of the SEC Alabama, Joseph Borg, pointed out that Celsius is continuously answering the question to the authority, but is still in the early stage of the investigation. SEC and currently still communicating with Celsius. The ironic thing is that Celsius used to use Unbank Yourself as their slogan, but according to the blog, they hired Citi Corporation as their consultant. So I think currently Celsius is trying everything they can to get out of this dilemma. The well-known cryptocurrency fund 3 Arrows Capital 3AC confirmed it has suffered heavy losses in the recent market downturn. 3AC was additionally known as one of the largest holder of the Grayscale Bitcoin Trust, an institutional Bitcoin product, as well as staked Ether tokens. They currently hire legal and financial advisors to figure a way out. As calculated in April, the fund has over $3 billion worth of cryptos under management. 3AC exploring options including asset sales and a rescue by another firm and hopes to reach a settlement with creditors. According to Davis, 3AC invested over $200 million in Luna tokens as part of the $1 billion raised by the Luna Foundation Guard. No question asked, now it's basically worthless after the whole system collapsed. After seeing this kind of liquidity hassles happening over and over again, it'll be hard for investors to stop doubting the whole system. But there are still a lot of crypto companies that are more stable and not that dodgy. So studying the collateral base of liquidity will be the priority for every project. There are lots of sounds around the market wondering if DeFi is dying. Before we make any judgments, let's check out some data first. Then we can see why people are thinking about it that way. There are 3 major data we can use to determine the market status. First, we find the TVL, which is the total value locked. As we can see, the TVL of DeFi dropped from $186.8 billion to $62.1 billion US from the highest point last December, which is a 66.5% drop. Then we can see the volume of the loans. According to the data, the outstanding debt dropped from $21.1 billion to $5.1 billion US, which is a 75.3% drop. This, in an easier way of explaining this, the leverage demand has dropped, which is a typical sign of the bear market. Finally, and the most important, which is the trading volume. The trading volume of DEX was at the highest point of $308.6 billion US last November. According to an analyst from Banker, it might drop to $103.3 billion US from June, which is a 66.2% drop. After all the data listed, we might be quite horrified. But these are just a sign of the typical bear market, and it's not just happening for DeFi, so it's too soon to make any conclusions yet. If you still don't buy it, let's take a look at the performance of NFT as well. According to the chart showing, it's the price change of NFT from April and May. As we can see, NFT also crashed after the USD pegged. After the Fed announced a high inflation rate, it also officially entered a bear market till now. And here is the decrease of the average sales price of a Blue Chips collections. FYI, Blue Chips is the highest stake chips in casino, so it represents the high value NFTs currently sold in the market. We can see investors selling NFT from April till May will have to suffocate a 27% to a 46% loss. The reason why we track the Blue Chips is that the advantage of their trading volume. There are over 85% of BAYC traded in total. So BAYC takes a major role in this skyrocketed plummet. Based on all the data showing, NFT is also going through the same pattern because we are all currently in the bear market and facing economic recession. So please keep in mind that don't enlarge any specific sector from the impact of the whole economic event. Now, let's check out the market movement. This is a daily candlestick chart of Bitcoin. As we can see, Bitcoin dropped to the lowest point of 17,593 this weekend, but the major leading indexes didn't have any significant movement on Friday. So Bitcoin also entered a consolidation mode. Now, if we take a look at the weekly candlestick chart, we can see how large the candlestick created last week is. Even though it's pushed back to the support zone, it still left a really long shadow below. So as I mentioned before, the current market is really unstable. And this is the hourly candlestick chart for Bitcoin. Bitcoin is currently trying to recover from the last drop over the weekend. It's dropped close to 14% to the lowest point. We can see it's currently climbing up slowly through the channel, but is this bounce a long signal? As I mentioned, it's just a recovery because the pressure on top is intense. So we can always set a short position around the top white pressure zone, then take profit at the lowest point created on the weekend, 17,593. Let's see what's going on with the altcoin we talked about. This is the hourly candlestick chart of Ethereum. As we can see, Ethereum is going through the same pattern as Bitcoin. It dropped around 19% to the lowest point. But the base value of Ethereum is lower, so it's not something surprising. The difference is the pressure zone of Ethereum is closer, so we should possibly expect a drop sooner than Bitcoin. This is the daily candlestick chart for Tezos. After the drop before the FOMC meeting last week, it is currently also in the consolidation phase. Even though it dropped to the lowest point of 1.193 last weekend, the difference is not that much compared to Bitcoin. Probably because altcoins have suffered through the mass drop down before already. Now it's dropped around 87% from the highest point, 9.177, possibly even more in the future. This is the daily candlestick chart for Cardano. Cardano actually kept its consolidation phase longer. The special thing is that most tokens created a new short-term low during this weekend, but instead, it is still holding up better than others. So it is actually a good timing to find projects with more resistance, but it's still not the right time to enter yet. This is the daily candlestick chart for SAND, the gaming token we talked about. SAND created a new short-term low at 0.7322. If calculated by this price, it dropped around 91% from the highest point, which is a very few that dropped over 90%. So we could keep track of the price movement even though the project seems very promising. Of course, with this kind of drop-down ratio, it will also have a very high pullback as well. This is the daily candlestick chart of Dogecoin. I believe the first thing that popped in your mind will be Elon Musk. Dogecoin is a peer-to-peer open source cryptocurrency. It is considered an almost sarcastic meme coin. From this chart, we can see it's also going through a consolidation, which is also a high probability of getting lower. So let's wait and observe if another topic comes out. Overall, the current market situation is that everyone is enlarged in each individual sector dying. But we can not only focus on each sector individually because we're all in the bear market. So most of the sector will seem horrifying. We can see altcoins are showing resistance probably because it's already dropped too much before, which we can find great opportunities after another drop. Thank you for watching Watch Your Crypto. If you like my video, please don't forget to hit the like and subscribe button below. I am Alan Chang. I'll see you next time.